But yeah, I'm hoping to have all these indicators and stuff out to you guys in the next few days. I'm just waiting for my coder to get back. There's a couple things I need tweaked on market structure indicator, and then that's about it really. There's been a little discrepancy. So this is Brian's original indicator, and I ended up taking it, and the way he had it marked out is a pullback was, I think, 3 to 5 candles. So we got rid of the candles thing, and we ultimately what we did was made it a pip thing. So for example, if you wanted to change your pip adjustment for any time frame, you could. So like right now I have my daily time frame sitting at 80 pips, but if I wanted to put it to 100 pips, I'd edit it in here rather than going to candle value. What my little coder guy forgot to do is get rid of the 5 candle value. So it's looking at the pips and the candle value right now. And I just got to get him to get rid of the candle value. Like if I get a 90 pip pullback on daily and it's only 1 candle, it's not mapping to the structure right now. So aside from that, everything's working. So he's supposed to be back tomorrow or the next day here. And as soon as I got that changed, I'll make a quick video on how to use all this stuff. Ultimately, it's just designed to make your life easier. You may or may not even choose to use it. That's completely up to you. For myself, indicators are number 2. Number 1's hey Stefan, what's up, buddy? Indicators are number 2. Number 1 for us is always PA, obviously. But I think it can be a big help to those guys that are struggling with market structure and whatnot, because it makes it pretty simple. Like, and if you have too much structure, like right now, 15 minutes set on a 12 pip pullback. And if you're finding you have too much structure, you could change it to a 15 pip pullback or whatever you find works for you. And depending which pair you're trading, you'll want to be able to adjust those pips. So for EU and GU, basically the default settings should work. Most US majors, it'll work. You start trading aggressive pairs like GU and that, you'll probably, or GBP AUD, I mean, you'll probably want to up your pip size a bit. But I think that's all that's coming. So we'll get going here. So just to quickly look here, we obviously reacted off something. Oh yeah, and the other thing too is, so I found this really annoying, how many dots it maps. So we could actually do something like this where it'll just map 3 highs and lows, because let's be honest, it shouldn't map anything but the last 3. I don't really care what market structure was in May, and I don't think you do either. So yeah, we added some adjustability. Everybody will be able to customize this stuff, which is kind of cool. It was kind of nice that Brian had this developed and we had something to work with, because nobody's really developed anything for market structure. So we have a 4-hour zone here. Might even be a daily zone we're tapping, but I'm going to pull this whole zone right now. I'm guessing we're reacting to something in here, and this is a daily order block, which we could actually just quickly scoot over and look at. So yeah, so we are reacting to a daily zone. So just to make things simple, we'll just pull one of these wicks for now. This is actually a weekly zone too, I believe. So you do get a pretty decent reaction off one of these. I'll call it 4-hour because that's where I want it to appear. So if we just go to the 4-hour, we're obviously very bearish. We did hit a pretty strong zone. We do expect some sort of a retracement here, just quickly looking at it. And then the next thing we're going to do is just jump down to 15 as always. And as always, we're just going to be looking for trades off the 15-minute. And if the 15-minute aligns with it, then we'll likely try and take a trade off of it. If it doesn't, I'm not a big fan of taking stuff off anything less. So just kind of looking what we got going on here. Can everybody see my screen okay too?
Yeah, more or less perfect.
Okay, cool. Cool. So I have a supply here. That's our lower high right now. So 15 amp supply. We have another supply up here, which is another lower high. So we'll go 15 amp supply. Now here we have a couple of regions. So we have this zone here, which kind of initiated this push up, but the more prevalent zone is this wick. And the reason we're going to pull the wick is it's actually the cause of the flip. So let's just look into this in a little more detail here. So if I looked at this as my last kind of supply that kind of drove stuff down, I'm going to consider this supply as something because if you zoom in and look at it really closely, we did get a little bit of a wick below this demand. So this is actually a 15-minute change of character here, and which leaves you with 2 points of interest, one being this one, and two being the wick that actually took out the reaction point. Let's change that to reaction point. Please help me find market structure indicator for MT5. I don't have one of those, dude. So this is only developed for TradingView. Yeah, I don't even use MT5 to be honest. I still use MT4, but for me, it's just an execution thing. I don't really care what's on my MT4 chart because I do all my analysis on TradingView. I don't know if there is one for MT5 or not. I imagine somebody made one, but I definitely don't have one, man, and I won't be making one. Everything I make will be for TradingView, just because it's pretty much the easiest platform to trade off of. So on the flip side here too, we have a couple of reaction points that we can kind of talk about. These are all reaction points. We're going to be looking at it, what takes them out, if anything does. We have another zone down here, and it's the same scenario. You have a supply, you have a reaction point, and then we have a demand that took out the reaction point. Alternatively, this down here is a demand. If price makes it down there, we can start pulling demands. We are at the extreme of a lower high. We are bearish. We do expect a good pullback, but you'd be silly not to try sells here as it is with market structure, and you'd be silly not to try buys. So this is one of those zones where you have to take a hit on something, and that's totally fine. If price does start breaking demands, though, we're going to assume this low becomes weak and we're going to run it. But as of right now, this is pretty relevant to the structure we're working within. Just to make stuff easier to see, guys, I'm just going to move this 4 hour, not even 4 hour, I think it's a daily. What we're going to do is just move this back here. We're all going to just say we understand that we're in a 4 hour demand. We'll leave it off to the side. If this low gets broken, this 4 hour demand gets broken. But I think it'll be a little cleaner to work with if we do it that way. So right now, for anybody trading London, you're likely just getting to the charts. Frankfurt Open is when I would be looking at London if I was looking at it. So 6 o'clock right about now. And ultimately, we're just going to wait for the 15 to give us a trade of some kind. Where is... And if anybody has any questions or anything too, feel free to type it in the chat or just ask. Okay, so... So yeah, right now, guys, like I said, we're looking for the 15 to give us something. And anytime the 15 does something, you're going to see a drastic move up or a drastic move down, and it's likely a 15 wick. So as soon as we get something like that, so right here, that is likely reacting to something. So we did get a 15 wick above that. Right now, we don't know if that's a rejection or if we're reaching. So we're going to keep that in mind. But this supply did get wicked above if we count this one as the relevant supply here. There's a wick above. So there's a little bit of disrespect there. We haven't taken out this supply. At this point, we don't know if we're reaching or if we're grabbing liquidity. So we're still just going to hang out and wait. And this is one of those perfect zones where, like I said, you'll likely take a buy and a sell and just know that you're going to lose one or break even on one, which is totally fine. So right there, you start seeing stuff like that. You're going to want to go investigate what that is because that's likely a wick on the 15. The next thing you have here is a change of character. But anytime you see a little move that takes out little even 1 minute swing points, always go back to the 15. See if it did anything on the 15. See if we have wicks reaching or rejecting. So I'll go change a character top. I changed my change of character color lines to orange, and I really don't like them. I'm going to be changing them back. But for this session, they're going to be orange. So 1 minute change of character, another liquidity grab, disrespect of two demands here. We are still bearish. You are at the 1 minute extreme. However, on the 15 side of things, you are low on the leg. You are low on the leg, but if you're being reasonable here, this high is not guaranteed to fail. So you would definitely look for a sell from this point. If we're like down here or down here somewhere, not a chance in hell I'd be selling from down there. The overall scope, yeah, you're low in the leg for sure. You preferably want to sell from here. Seeing how we day trade though, and this is euro, it's not really guaranteed to get there in one session either. So if we just go to the 15 and we investigate, you're going to notice two things. And there's two ways of looking at this. One, we have an inside bar here, which is our last source of demand. This inside bar, the inside bar here, wicked above here. And we're not sure if that's a liquidity grab or not. But the next thing we get is we get another wick above. So now when we see... when we see two reaches like that, to me right away, I start thinking maybe price is reaching because that's consecutive three higher wicks. On the flip side of things, we are at the extreme of a lower high and you just wick below a demand. So as of right now, everything's bearish. So you definitely would take a sell. The fact that we've made three consecutive highs with wicks though, that to me is price reaching too. And like I said, we don't know if it's reaching. We don't know if this is just more liquidity grabs and we're going down. So this is a prime candidate for taking a buy and a sell. And you basically just got to eat a position. And that's totally fine. So we didn't really have any kind of interaction here. So right here to me would be the actual chalk. The one below is probably a little stronger chalk because that's the actual 1 minute swing point. But this one to me would be a chalk. So like I said, you have a reason to go down. The momentum's definitely there. You just took out two demands. I would put a sell on this all day long. On the flip side of things, we also have wicks reaching to the upside. You can't ignore that. So we'll stick a sell on this. Pip and a half. So that's relatively small. But yeah, so what would you guys want to see to buy? Just out of curiosity. Anyone?
No.
No? Okay. So if we want to buy, we're going to want the 15-minute to support that in some way again. And it'll likely look like something. So it'll look like, hold on, where's my thing here? All right. So the 15 doing something, you seen how you had something aggressive here and you took out this low. If you're going to be looking for a buy, you're going to want aggression back up and take out one of these 1 minute swing points. Anytime these little 1 minute swing points go, they're not really relevant. But when you look on the 15, that's either a chalk or disrespect, or the candles are reaching, and you can't disregard that. Can you please explain the trade again? Yeah, sure, man. So on the 15-minute side of things, we have this inside bar here would be the last sort of a demand I would consider as prevalent. The reason this demand is important is you kind of have this whole reaction point thing going on here. And this kind of disrespected this reaction point, and you reached above this. So this to me is a disrespect of this supply, or it's a possible liquidity grab. The next thing we get is another reach up a little higher, which is telling me that maybe the market wants to go higher. But at the same time here, the market is also reaching lower. And by lower, I mean we wick below here. We wick below these. So that to me says you also have to look for sells. So like I said, we're bearish on every time frame. We're at the extreme. So if the 15 candle body closes above that supply, we become unconfirmed bullish on the 15. So we're always betting on the trend not failing. So from an extreme like this, you would take a sell. But one high, two high, three highs. These wicks are reaching. They're definitely reaching. And this is for sure something you would throw a buy and a sell on. Like I said, most times you got to eat a position. Sometimes we're fortunate enough to break even. So we'll wait here. This would be the chalk and flip zone to me. And then at the same time, I want to see a buy scenario out of that. Presuming 15 reaches. Okay, so that one hits stop loss, and that's totally fine. So now something to keep track of. If we just go back to the 15, so you have one high, two high, three high, four high. You have 5 consecutive wicks that are higher and higher and higher. You still haven't broke past the supply, but would it be safe to assume that maybe price is reaching? Would it be worth looking at? And to me, absolutely you would. The area that stands out to me is this long wick doji thing. So this would be kind of a demand I would look at the same time. And for those of you that are a little less risky, you might have taken like a 2 or 2.5 pip stop. You might have been still in that. You might have not. Myself, I try to keep them as small as possible. So the 15 is definitely reaching. You can see consecutive swing highs on the 1 minute. Those are 15-minute wicks. I actually want to check something out. 2 seconds, guys. Okay. Okay. Perfect. All right. So now, if anybody sees anything they like say something. If you want to, if there's a trade you like, I'm more than happy to try it out. It says definitely supposed to be interactive. When price has reached demand or supply, must you wait for lower time frame confirmation? Yeah, so I do. What I want to see is something on the 15 that says we're going lower or higher, and then I want to see something get disrespected on the 1 minute too. So you want a respect of a level and you want a disrespect of a level. So what I mean is, so this is we're getting a signal here that the BFIs aren't pushing as hard here. This is a hidden divergence line, or a regular divergence. I'm sorry, regular divergence line. And what this basically means is there is not that much volume pushing this down right now. So it can't be your only confluence, but it's something to consider. We still want to see a chalk and flip. And if you're never sure, you could always wait for a second. So right there, you did. So you're respecting this 15 demand zone right now. And we'll go chalk top. Yeah, I definitely got to switch these colors back. I'm not a fan of the orange. And we'll go chalk bottom. Okay. So just looking at that, let's see. We'll just put this forward. So we get a buy signal from our indicator too. So these buy signals, the way we've programmed these indicators is basically the moving average and the RSI crossing. So the RSI in this case is used as a momentum line, and the moving average is just a 50. And BFIs use 50s and 200s, so that's where the 50 MA came from. And anytime these cross, whether you got a dot or not, it can be confluence if it fits into the rest of your plan. My plan right now is these wicks are reaching. So I'm going to go with, we're going to try a buy. And if the buy fails, we're going to turn around, sell it back down. So this right away gives me 2 POIs. POI 1 is this big doji thing. POI 2 would be right below it down here. Both would be valid, but I like to see what took out the reaction point. In this case, we didn't get a reaction point. It just came right through. There's probably something in here on the seconds, but if I go in the seconds, we'll lose the chart. And this is where I'll go down to the seconds and investigate. And I can usually pinpoint if I should take the bottom half of the doji or the top half. Let's say, for example, this thing's like 4 pips big or 3 pips big, and I only want to take a pip and a half or 2. I will look to see if it's in the bottom half. And if it is, I'll just put the order there. If it's in the top half, you're kind of screwed and you got to put the whole order in. But a lot of times the seconds is good for that. I haven't been too keen on teaching it to people, because anytime I've ever showed the 15-second to people, it's done more harm than good. So that's our top end there. And this one here, from the 15 side point of view, You have sell to buy wicks here. You're going to react off of, which is exactly what we're doing right now. So you can expect some sort of a mini reaction off that. Whoever's making noise, do you want to mute yourself? Just gonna mute you. Perfect. So yeah, we expect a reaction from these sell to buy wicks. But at this point, you have, what is that? 1, 2, 3, 4, 5, 6 consecutive candles that are going higher. You can definitely say the market is reaching. The first relevant point to me that's done anything is here. This supply would be the target. We're heavily counter 4-hour trend, so I would be looking to take partials quick. We also just took a loss. So myself, if I take a loss, I will partial out a trade at 5R. Even so this, for example, what is that? 1.8 pips. You could probably get that down to like 1.5, 1.6. So the way I manage is if I hadn't taken this first loss, I would hold right to TP here, which is the next supply. Since we took a loss, I want to likely take partials at 5R. So at 5R, let's say we take 50%. For those of you that don't want to wait 5R, you could do it at 4R. But as soon as you have a loss or two on the day, you need to pay yourself quicker and you need to cover those losses. Everything comes down to risk management. Like some days, if I'm having a bad day and I took 3 hits and my trade's at 3R and I have a chance to break even on the day, I'll close that trade out and just quit trading for the day. I won't sit there and be like, go to 5R and make sure I end the day in profit. Sometimes I'm happy with just taking a break even and not being in the market. So where's my thing? Here we go. And from a management perspective too, 1 minute boss guys, it's usually a good area to break even. So we never had the opportunity to break even here, so we took a hit. And just so we know, wherever 5R is here. Yeah, so when we get to 5R, I am definitely taking like 50% partials. What we can do is even just do this 5R, leave a little line there. Okay. So for myself, from my management perspective, when this high gets broken, I'll put price at break even. I've been managing like that lately. I stopped partialing out 20%. In some ways, it's been working really good. And in other ways, it's been kind of a nightmare because I've been taking break evens that have been running to target too. So that's our 5R there. I would say I'd partial out 50%. So you're 2.5R on the day. However, you're covering a loss and you're covering 2 commissions. So you're just above at break even for the day. But that's totally fine. You still have 50% left on. So, what did it do here? That's a little bit annoying. Okay, so we broke even on the rest of that. That's totally fine. I'm just gonna close these windows because we're lagging for some reason. Maybe even close that. I'm gonna close. No, I don't want to close that. I don't think. Okay. All right. So now that we just took break even on the rest of this. However, we took partials, so that's fine. Right now, we're pretty much break even, maybe a little in profit. And that's how you want to be managing because nothing's guaranteed. Is it going to go there? Very likely. Does it have to go there in one drive? Definitely not. And what happened here is we ended up grabbing this sort of inducement, and it didn't actually even tap the POI below. What it ended up doing is tapping the 2-minute POI, which happened. So had you had an order on the bottom, you wouldn't have got tagged anyway, especially if you account for spread. And that's totally fine. So let's just go to 15 here and let's get rid of these zones here. They're no longer relevant. They've all been broken. This candle body closes on top of them. Now what we have here is a new demand zone that hasn't been mitigated. So now that we mitigated this demand zone, myself, I would look for another chalk and flip. And if we don't get that, we could look for 2 flips. Something I want you to make note of is pay attention to how price stacks here. So if we just look, price is very, everything's mitigated. And what we did was we stacked a bunch of trend line liquidity there. Anytime you see that, that'll likely get run. No, it doesn't have to get run in this session, but when it's stacked and it's mitigated, it's usually something like this, something like that. And they do always come get it. Even if it's not this session, it's stacked like that for a reason. So anytime price is struggling to go up, it's not struggling to go up. They're stacking liquidity. So just looking at this again, does anybody have any idea where they put an order in on this? Annotate on the screen. I just want to see where you guys would put an order. Yeah, exactly. Exactly. Yeah, that's the exact zone. So that's the highest probability setup is that. The second one would be the sell to buy wicks. And the simple reason is we once again have a change of character. Oh man, these orange lines got to go. We have that change of character. So we have a flip zone here, right? You have change of character and you have a flip zone. If you really want it to get technical, this little doji below is the actual most relevant POI, your supply zone. And this is your reaction point. And this little doji that someone so kindly drew for us would be your highest probability setup. And again, you're heavily countered 4-hour trend. So the chances of you holding this for long is probably not very high. But so this is London session. If you notice, all the stops are super small. London seems to get that more often than we do in New York. New York, I find myself at 2.5 pips, 2.7 pips sometimes, which is not the most ideal for Euro. But this, you could probably even get it down more, but 1.8 is pretty good. Now, myself, anytime I'm trading calendar 4-hour trend, guys, if I do leave a runner on, what I end up doing with that runner is I'll likely partial out 70, 80, 90% here, and I'll leave very little on. We're bearish on every time frame. I'd likely just close this. Anytime you're going pro trend, though, you can definitely, partial out 50, 60% and leave a bigger runner on because it actually has a chance of making it somewhere. So TP hit on that one. So right now you're pretty much break even or up like 1R off of this trade, and you just scored another 5.3R. So you're probably at 6-7R on the day right now. That's a pretty good start. And again, so we do get a sell signal here. When I do release this indicator, I don't want people jumping in this sell because the indicator said there's a sell. I want you to wait for the 15-minute to show you there's a sell. And if the 15-minute doesn't, you shouldn't be in one, regardless of what the indicator said. And that's kind of my biggest worry with this is people will just start taking every buy and sell. And I can tell you I've tested it, and you will wipe your account if you take every signal it gives you. Because all these signals are, it means less volumes getting pumped at the top, less volumes getting pumped at the bottom. So it's like a hint that here you want to continue up, and this is a hint that here we want to go down. But if these little indicator hints don't line up with the trade you take anyway, you have no business being in that trade. And here we get an MA cross too. Momentum crosses the moving average. Now, this is kind of on the more sensitive setting too. Like a lot of you will probably choose to set these indicators a little less sensitive. I keep it pretty sensitive, but I also know that a lot of these signals are, it's going to throw out a lot of fake signals. And they're not so much fake signals. It's just telling me that less volume is getting pumped in here. So like right here, I know the BFI stopped pushing hard. And if that somehow fits into my trading plan, great. If it doesn't, then we probably shouldn't be in it. So myself, this is kind of dead volume time here for London too. Here I'd likely just kind of chill out till the New York kill zone comes in, unless we see something super textbook. Let's actually just go see. So right here, so you get a liquidation of an area. You barely tap this supply. I want you to notice this candle size. We got an engulfing candle. That could be willingness to go down. The only place we really have to go is probably somewhere into one of these POIs or down here and properly mitigate this wick a little lower and scoop up all this trend line liquidity. But as of right now, I mean, that is a 15-minute chalk. Let's see if it comes back higher up. Maybe we could look for a sell from within this wick if you get a nice chalk and flip. The flip side of that is to continue buying this. And this is kind of one of those things where if you do it, you know it's higher risk because you're in the lower volume time. But if you could get something on the 15 that says keep buying, then we keep buying. So myself, I likely wouldn't be too concerned about taking a buy or a sell right now. If it, taps in quite a bit deeper and the 15 says buy, I'll buy it. If it comes higher up and the 15 says sell, we'll sell it. As of right now, this wick is kind of where our 15 chalk came from. You can definitely look for a sell from somewhere higher up. Maybe even deeper in the supply. But what you're going to find a lot of times during the dead volume time, so like right here, this is where you become liquidity. And it always happens during the lower volume time. So right now, Asia went home. This is just London volume. So you do get a tap into this demand. You do get a buy signal. Myself, I likely wouldn't take that unless there is something higher time frame. If you did, you definitely want to manage aggressive. So this right here is telling us there's low volume pushing down, and this right here is telling us there's low volume pushing up. And you can see the result of that is price isn't really doing anything. We're kind of stuck in this mini range. Personally, I've lost more trades in these little mini ranges than I've won, so I avoid them. If you choose to trade them, I would manage extra aggressive. And even if a trade does work out, don't feel like you missed one. It's like I said, it's dead volume. So right here would be your tap into this. Let's see if there's a 15 backing this. So you do have a 15 chalk up here. Swept the lows, you swept the high. So you do have 15-minute backing you here. I likely wouldn't get involved in this, but just for the sake of a backtesting session, let's see what happens. So this is actually right around the time I get to the charts. 12 o'clock London's 4 in the morning for me. So this is when I start looking at the charts right here. And this is when your volume starts picking up again. By 1300, we have 13 to 1600 is your highest volume, but this is the start of it. But do you see how we didn't really do anything in this 2-hour window when Asia went home? And if you guys are paying attention earlier, I was saying if one of these swing points gets broken, it is likely a wick below and a wick above on the 15. So this right here was a chalk down, chalk up on the 15, which did give us a buy. You're just getting close to the volume time. I don't know if I'd be in that, but like I said, back testing session will take it. Ooh, that doesn't make a guy feel that good. And you can see even here, we're still getting red lines. And the red line was basically saying the volume's still not really there. I'd likely break even on this. Yeah, so as soon as we take this high, I'd break even on this. Okay, so that disregarded everything I said and went to target. We'll just pretend that didn't happen. But like I said, I likely wouldn't have taken that. But the 15 was there, the chalk was there. So if we get something on the 15 that says buy it, buy it. If you get something on the 15 that says sell it, sell it. And that'll likely steer you in the right direction more often than not. Speaking of the 15. So we did just wick above that again. You do have your last sort of a demand is here. So now we want to see if this demand is getting respected. Whether you want to continue on up. On the upside of things, you're a little high up, but if it's to continue up and this demand holds, continue on up. So just go back to the 1. So this is when your real volume starts coming in. So these are equals. You never got a proper chalk here either. What you did get is a demand that did not hold. You actually got 2 demands that got disrespected. So we can definitely delete that one. If we go back to what we were saying earlier, if these points get taken, that's again, wicks above on the 15. So anytime you see these little 1-minute swing points get broken, go back to your 15 and just quickly look. So you have a sweep of liquidity and a disrespect of a demand, The next thing I want you to notice is the size of this wick. That is a V-shaped reaction. It 100% is. The wick's way bigger than the body. What I want you to notice is what followed that wick and the size of that black candle. It would be safe to say that's the biggest candle we've had in a while. And the only other candle that really matches that one's another black candle here. Even this candle coming back up, it's not bigger than the black candle. So right now, I would say momentum is bearish. The disrespect of the demand zone, to me, I would say that wick. So you would have like some sort of a supply zone in here. If you're being realistic with yourself, anytime you run a 15 lower high, you need to pay yourself. Yeah, I think all this trend line liquidity is going to go, but you'd be silly not to pay yourself anytime a higher or lows run. Always take partials. You'll feel better making a few $100 than making nothing. So for those of you diehards that don't wait for the 15, you'd likely be in this because it's a 1 minute chalk. Actually, you wouldn't even get topped. I don't recommend taking these. It's just not enough for me. I want to see the 15 get respected. The easiest way I can put it is put yourself in the shoes of a swing trader and pretend you're looking for a swing position. They enter on the 15 and their trades are longer term. Well, you got to have some long-term vision for your trades, even though you are a day trader. If you wouldn't enter a swing position there, don't enter a day position there. It'll likely burn you. So right here, indication that volume's low, meaning this push isn't that strong. So right here, you can start formulating the idea. There's not a lot of volume in this move. Here you get your chalk. To me, it's this doji. If you're really smart, you'll probably cover these high wicks. Let's see how much that is. It doesn't look that big, actually. So what is that? Yeah, even if you cover the high wicks, your, what is that, 1.8 pips? That's pretty good. So right here, we got a test button. What these orange dots are signifying is a sell signal. The way these sell signals are pulled is we had a divergence here. The divergence is showing that there's low volume pushing this up. When there's low volume, we're basically looking at it as the BFIs aren't pushing that hard. The next thing that happens is you get some engulfing candles and this orange dot pops up. So what this orange dot actually is when the MA and the momentum lines cross following a divergence, just like the blue dots are an MA and a momentum line cross following a divergence. What you're going to find is wherever this dot appears, if you have a trade idea, a lot of times these dots will get hit and it'll get visited. It does not mean you stick your trade exactly where the orange dot is. What it means is if you have a trade idea that you're planning on, for example, you were planning on selling here and this dot appears, you have like one extra confluence. So there's our top, bearish engulfing, just the way we like it. And speaking of that, let's just 15 here. You would likely want to take some sort of partials at this low. Yeah, you could aim for all this trend line liquidity. I would take heavy partials at this low. You're obviously risk-free on this trade right now. Just gonna move over to the side. If you want to even not be greedy and say you're going to pay yourself at this demand, you could partial out, 50, 60%, take something off the table. There's nothing wrong with paying yourself. There really isn't. So here we get a hidden divergence. So again, this is a sign saying the BFIs aren't pushing that hard. And this is actually a continuation sign in this case to keep on going down. You're likely going to want another chalk if you're smart. So to me, like this doji stands out to me, but so does this wick. I would likely take the doji, but I don't know. I would likely just take this doji and cover that wick. What size is that? Let's see what that is. It's a little large. A little bit large. Maybe we could do something like this. If you got to pick the extreme, even if you don't get tapped in. I'd rather do something like that and not get tapped in. So New York just opened 1400. And in case this trade doesn't work out here, your partials off this one. So let's say we were smart and we paid ourselves 50% that 5R. You took 2.5R off the table here already. So if this trade doesn't work out, this loss is covered, and you're still a little bit of money in the bank after commissions. So that's like the only way I'll enter a second trade is if there's no risk after. So 2.9, that's definitely not happening. 2.1. No, even that's like a little bit large, but maybe we'll move it down a bit. If you could get away with 2 pips, try to. Just not a fast moving pair. So now on the flip side here, we don't have a lot of volume pushing down. We may or may not have got tagged into that. Seeing how we're selling, the spread would be in our favor. So that would have tagged us in. Because the spread's sitting 0.2 above, 0.3. So like I said, you may or may not have got tagged into that. You can see it's not really, it's not an ideal scenario. This is why you're better off getting in at the top, but I would definitely be break even on this if that did tap us in. So you took half this position off. If this does land target, you'll get 4R on this trade on the second half of it. This is literally just a 4R. In all honesty, I don't actually know if I would have taken this if it didn't hit 5R. But yeah, I don't know. 4.8, 4.6, somewhere in there. It's not ideal, but so that did hit TP. At this point, I would likely not even take a trade. Like, this is awesome session. Obviously nothing like we've been dealing with the last 10 days where half the days were good and half the days weren't so good. And yeah, does anybody have any questions too? I know you guys have kind of been quiet.
Bro, I have a question.
Sure, man.
Is this indicator or the hidden divergence line is repainted?
Yeah, so the orange and the blue is real divergence. The green and the red is hidden divergence. So hidden divergence.
My actual question my actual question was this: is it repainted? I mean, sometimes it show the first time here, but another time maybe it broke go up, then again it show again it here. I mean, is it repainted? This
No,
indicator?
no,
Okay, great. That's great.
no, it won't do that. Also too, like these dots, they only pop up if there was a divergence before an MA cross. If no divergence happened right here and the MA just crossed, you would have no dot. But even if the MA crossed and you didn't have a test button, like that's still a trade confluence because momentum just crossed the MA line, right? And they're pretty adjustable. So on the like you can pretty much adjust them to whatever you want, the RSI period, how many candles you want them looking left and right. So this one's set to 2. You can make all the words appear on the screen. I find it's really noisy, so I turn them all off. Whatever you do to this indicator, though, you have to go and match settings on this one. So if I put the RSI to 21 on the entry, the RSI has to be 21 on the precision chart divergence too. Because if the numbers don't match, you'll have different divergences and different hidden divergences. And basically the indicator down here won't match the indicator up here. But for the most part, I think everybody will be able to figure that out. I am going to put that in the video. I'm going to make a quick video of how to use it, what it is. Like I said, my biggest fear is that people are going to be like, oh my God, there's an orange dot. I'm going to sell. Oh, wow, there's a blue dot. I'm going to buy. And that's not what it is. If it matches up another trade idea you have and it supports it, it can be extra confluence. But if you were to take every one of these signals into a buy and a sell, you won't do very well. You won't. And that's why I'm kind of glad we did the whole course and no indicator thing first. Because this is supposed to be like a helping tool. It's not supposed to be the only tool. And the tool goes back to this. If you can find me a trade reason you'd get into a trade on this 15-minute chart, then you have a reason to be in it on the 1 minute. If you cannot find me a reason why you would take a buy or a sell on the 15, you shouldn't be in that trade. Maybe you trade supply and demand on the 5 minute and the 1 hour and you see something different. That's totally fine. It definitely works. But if you use the 1 hour and the 5 minute, then stick to the 1 hour and the 5. Don't be using a million time frames. Like I go from the 10 to the 30 minutes, but to me, that's ultimately, I count all of that as 15 minutes. It's just kind of, I guess, fine tuning. Because sometimes I can't get a 15-minute chalk, but I'll find a 13-minute chalk. And that to me can be enough to try a sell or a buy, if that makes sense. But yeah, like I said, my programmer's supposed to be back in the next day or two. As soon as he fixes a couple of things and changes a few things I don't like in the code, I'll be dropping these for you guys. I'll make a quick little 10-15-minute video that basically says what not to do and what you can do. And ultimately, it's going to come down to you guys testing it. Like I said, this right now is set really sensitive. If you want to turn the sensitivity down, you'd likely set the RSI to 21 or maybe 34. But then you're going to want to do your lookbacks at 3 candles or 4 candles. I wouldn't go 5 or above. It won't print anything at that point. So 2 to 4 and 14 to 34 is kind of the sweet spots for RSI. For those of you that went through ICT's mentorship too, those are the settings he recommends. So this idea came partially from his one of his teachings, actually, where he showed how to find divergence on indices. And he talked about the MA and the divergence. And there's, I don't know, there's probably 100 different versions of this same indicator. And all it is it's the same version of this with their settings. So I found a setting that works for smart money concepts. You may choose to change it because you enter on the 5 minute or you trade the 5 minute and 1 hour, and that's totally up to you guys. But the settings it's going to come preloaded with is what I'm going to be using. So that'll kind of give everybody a starting point. Like I said, probably Tuesday, Wednesday, somewhere in there, I'll have everything dropped to you guys and you guys can play with this, and I'll make some instructions. But for those of you that have used this before, you'll see that it's pretty easy. Those of you that haven't, I'm going to make a video for you that makes it pretty much, idiot proof. We'll keep things as simple as possible. But in this case here, the signals worked out in our case. I backtested a few weeks worth of data, and I would say half the time it supports my ideas. The other half the time, you get signals like this, and you just can't be in those if there's not a 15-minute idea behind it, if that makes sense, guys. But what I'm going to do is we'll stop the recording.